Good evening, everyone. I am Nakamura, President and CEO of Rare Job Inc. So from now on, I would like to begin the supplementary financial results briefing for Rare Job Inc. for the fiscal year ending March 2026. Here is today's agenda. First, we will discuss the full acquisition through a share exchange by Gacken Holdings, followed by a summary of our consolidated financial results, and finally, a Q&A session. First, let me talk about the full acquisition through a share exchange by Gacken Holdings. All right, I will now explain the share exchange agreement that we have concluded with Gacken Holdings. Although we will have a Q&A session at the end of this briefing, we kindly ask that you refrain from asking questions regarding this matter. Here is an overview of the share exchange with Gacken Holdings. Today, our company has entered into a share exchange agreement with Gacken Holdings Company Limited. If this matter is approved and passed at the annual general shareholders meeting to be held on the 25th of next month, our company will be delisted on July 29th, 2026, and will become a wholly owned subsidiary of Gacken Holdings on July 31st. This concerns the details of the allocation related to this share exchange. For each share of Reagive common stock, 0.39 shares of Gacken Holdings common stock will be allocated and delivered. Regarding this share exchange ratio, as for the premium, based on the closing price, specifically the closing price as of May 14th, the premium comes out to 15.04%. Now, regarding the significance of our company joining the Gacken Group, given the current situation with factors like the weak yen and the advancement of AI, changes in the external environment have made things tough across all our business operations. Given this background, we believe that rather than trying to grow on our own, joining the Gacken Group and carrying out a fundamental restructuring of our business will allow us to achieve sustainable growth. We also think this will help us realize our vision, chances for everyone, everywhere, more quickly and on a larger scale. That's why we made the decision to become a wholly owned subsidiary. Specifically, this includes collaboration in the online English conversation business, strengthening cross-area solutions in corporate training, expanding ALT dispatch services for schools, advancing digitalization and AI technology capabilities, optimizing company-wide costs, and reallocating management resources. These are some of the key points. And by going private, we can redirect the costs of maintaining our public listing toward product development, service development, and AI investment. We believe this will help accelerate our business growth. Therefore, rather than continuing to stay listed, we believe that joining the Gacken Group and going private is the best option. So we have decided to accept the proposal from Gacken Holdings and become part of the Gacken Group. Moving on. Next, I'll give an overview of this fiscal year's financial results. Here's the financial summary. Net sales were 9.6 billion yen. 9.6 billion yen, which is a 1.2% decrease compared to the same period last year. The achievement rate is 100% compared to the forecast announced in February. Sales for the reskilling business were 3.885 billion yen, a 16.7% decrease compared to the same period last year. The child and childbearing support business recorded 5.714 billion yen, a 13.2% increase year on year. Operating profit was 78 million yen, down 82.3% from the previous year. Net income attributable to owners of the parent was 325 million yen, a 21.1% increase compared to the same period last year. Regarding sales, while individual services struggled, the Tokyo International School Group was consolidated, and especially in the second half of the year, their contribution to the consolidated results led to sales ending with a slight decrease compared to the previous year. As for operating profit, the decline in revenue from the reskimming business and the one-time M&A related expenses incurred when the Tokyo International School joined the group had a significant impact. Although there was a decrease in profit, with regard to net income for the period, we recorded a gain of approximately 400 million yen from the transfer of the Shikaku Square service business, which allowed us to secure an increase in profit. Next, we have the consolidated income statement. Net sales were 9.6 billion yen, which is a 1.2% decrease compared to the same period last year. EBITDA was 386 million yen, down 48.5%. Operating profit was 78 million yen, down 82.3%. Ordinary profit was 93 million yen, down 77.9%. As for net income attributable to owners of the parent, it was 325 million yen, which is an increase of 21.1%. Well, as I mentioned earlier, it's the same factors: the decrease in the number of rare job English conversation members, the selection and concentration of certain services, the termination of Smart Method, and the discontinuation of classes at Shikaku Square. All of these things overlapped. So there's the part where sales are declining. And then, starting from September, there's the consolidation of the TIS group, which has contributed to sales as well. Next, let's move on to segment profit and loss. For individual services, sales were 2.147 billion yen, down 24%. For corporate services, sales were 1.738 billion yen, down 5.5%. As for the child and child rearing support business, the ALT dispatch service recorded sales of 4.772 billion yen, up 1.7%. The Children's Conversation Service recorded sales of 942 million yen, up 165.5%. For this children's service segment, in addition to the ALT and Children's Conversation Services and online English conversation, the Tokyo International School Group, which was consolidated from September, has also been included. That's why there was a significant increase in both sales and revenue. As for segment profit, the reskilling business recorded 207 million yen. And the child and parenting support business recorded 440 million yen. That's how things stand. The reskilling business includes rare job English conversation, that part, as well as the conclusion of Smart Method and the transfer of the Shikaku Square business. So we are working on reorganizing our portfolio. As for the child and parenting support segment, the consolidation of the Tokyo International School Group has led to a significant increase in revenue. On the other hand, regarding operating profit, acquisition-related costs are involved, so that's the area where we've seen a decrease. And these are the main factors limiting the profit of each segment. Regarding services for individuals, as I mentioned earlier, there are certain issues. To address these, we are currently working on rebuilding unit economics from both the LTV and advertising instructor profitability perspectives, as well as reducing fixed costs. By doing these things, we are working to improve our profit structure. As for services for corporations, our global leader development training continues to drive sales. On the other hand, regarding rare job English conversation, in some areas, the recovery in performance has been delayed, resulting in a slight decrease in revenue. Going forward, we will work to expand sales of high-demand value-added training programs while also focusing on improving retention rates and upselling to existing customers. Through these efforts, we aim to further strengthen our revenue base. As for the ALT dispatch service, sales have been progressing smoothly thanks to the expansion of contracts with new municipalities. We are also working to place high-quality personnel. As a result, the cost of ALTs has risen to some extent, but this has contributed to higher satisfaction in educational settings. We will continue these efforts as we work toward further business expansion. We will continue to make steady investments in personnel and other areas and ensure that we do things properly. Our goal is to achieve both increased revenue and profit. We want to value both our existing municipal clients and new ones as we move forward. Now, regarding our English conversation services for children, with the consolidation of the Tokyo International School Group, our sales have expanded significantly. On the other hand, in terms of operating profit, there have been temporary cost increases associated with the acquisition of shares, which has resulted in a decrease in profits. The quarterly sales trend looks like this. As for sales, since we already have existing staff in place, this factor has caused some fluctuations. As things have been fluctuating like this, we believe that now is the time for us to implement company-wide structural reforms. By thoroughly carrying out these reforms, we aim to put our sales back on a growth trajectory and achieve a solid five-shaped recovery through business structure reform. We are committed to making this happen moving forward, utilizing the resources of Gaki Holdings as part of the Gaki Holdings Group. We intend to move forward while making use of these resources. That concludes the overview of our consolidated financial results for the fiscal year ending March 2026. From here, we will move on to the Q&A session. If you have any questions, please submit them in text form using the Q&A feature. So if anyone has any questions, just feel free to type them into the chat here. We'll wait about 10 more seconds. If you have any questions, please go ahead and write them in. Is that all right? If there are no further questions, I'd like to conclude the financial results presentation here. With that, we will end the financial results presentation for the fiscal year ending March 2026. Thank you all very much.